Hello, our viewers and our students. I am again inviting you to our channel, and I also encourage you to continue sharing our links so that others may also get blessed like you. I'm inviting you to the last subtopic of the unit called Commercial Arithmetic, and the subtopic is income tax. I'll start the first part of it by defining some terms which are used under the subtopic. Therefore, I would like us to go through some terms so that before we do an example on taxable or on income taxes, then we will be conversant with every word we will come across as we deal with some questions on the same. And I'll be starting with the first term, the income tax itself. We know that very well that when people are employed, there is some amount of money they are paid or they are appreciated in terms of money. When employees have been paid, then it is demanded by the government that they pay part of their salaries or part of their wages back to the government. And such amounts which are paid back to the government due to an individual's income, it is what we call income tax. The amounts paid by employees to the government due to their income. So you get some income, there is a requirement by the government that you take a portion of it to the government, and that portion which we take to the government due to our incomes, we're calling it income tax. Now, the other term under this is called taxable income. And this is the amount on which income tax or tax is levied. Income tax is levied. Therefore, the amount on which income tax is levied, of course by the government, is called taxable income. And taxable income is calculated by taking the individual's basic salary plus all the allowances which are enjoyed by the given employee. Therefore, to get taxable income of a given individual, we take his or her basic salary plus all the allowances which are enjoyed by the given worker. Therefore, that is how we get the taxable income of a given individual. And that is the amount which is taxed, or the amount where tax or from which tax is levied. The other amount, I will call it relief. Relief is a deduction made on the tax, on the income tax, that is, on the income tax of an individual. Therefore, you may find that after calculating the income tax due to a taxable income, we are arriving at a certain figure. Sometimes the government might not take the whole figure we've calculated or the total income tax we've gotten after taxing your taxable income. Therefore, the government might give you a favor by subtracting or allowing you not to pay some part of the income tax. And that part which you have been allowed not to pay, or a certain employee has been allowed not to pay, is called a relief. And therefore, if we have known now what a relief is, this takes us to the next term, which I will call payee. Payee in full means pay as you earn. And pay as you earn is now the net tax. Actually, another name of payee, we can call it net tax, which is the tax now paid once relief has been deducted from your tax, from your income tax. Therefore, when we take the income tax or the total tax due to somebody's taxable income and we subtract relief, then we get the net tax paid by that person or the payee of that person. I will deal with something which is called housing. Housing. We usually say this, that if it is good to note this one, this is a very important tip. If the employee is housed by the government or any other employer, then 15% of his basic salary is added to the taxable income for taxation, and the nominal rent is subtracted. And the nominal rent is subtracted. Therefore, in this case, whereby the employee is housed by the employer, whether government or any other organization, we say that 15% of the basic salary is added to the taxable income for taxation, then nominal rent is subtracted. Therefore, in this case, we will say this, that in this case, the taxable income will be calculated by taking the basic salary plus any other allowance plus 15% of basic salary, which will be now house allowance minus nominal rent. Minus nominal rent. Therefore, when someone is housed by the employee, then 15% is added to the taxable income, actually is house allowance. It is added as house allowance to the taxable income for taxation. The nominal rent is subtracted. Therefore, taxable income is equals to basic salary plus all allowances, and the house allowance for that person is 15% of the basic salary, then minus nominal rent if he pays any. The last term I'll deal with is net income. The net income or the net salary. The net salary of a certain employer. We will say if an employee is paying some things after the end of a given month, then there is that net salary or net income, which at the end of the day will remain in his pocket. And that is what we are calling net income or net salary. Therefore, the net salary of an employee is gotten by taking the taxable income minus all deductions. Minus all deductions. Minus all deductions. Therefore, you may find, apart from someone paying the payee, which is the tax by the government, he might be paying other things at the end of the month. Like, for example, reservicing a loan or paying premiums to an insurance company and other several payments which might be made at the end of the month. And therefore, we are saying the net salary of an individual is gotten by taxable income minus all deductions. And the deductions include, the first deduction is pay, which is deducted by the government itself. Then if the first deduction is pay, we can have other deductions now. We can have other deductions, which will include now transport bills, which will include things like medical bills, which will include things like paying premiums to given insurance companies. And being conversant with all these terms now, then we can now wait for an example in the next episode. So that was part A. I chose to first make you conversant with all the terms which are involved in the subtopic. Therefore, welcome. As you wait for an example, make sure you share our link. Thank you and God bless you.